Many of you have asked me for an update on Pepsi. Pepsi is a stock that I used to talk about a lot on YouTube. I've been in and out of stock for many, many years. It's one of my favorite boring companies in the market. The stock was rallying a lot in the beginning of 2026. It was up, I think, 20%, almost 20%. And now it's down about 19% from its 2026 high. The stock has done nothing over the last 5 years, while the fundamentals have improved and a lot of things have started to turn up for Pepsi for the first time in 5 or 6 years. So I'm looking into the stock again and I'm going to talk about it. And I hope you enjoy it as always. Now, Pepsi needs no introduction. They own a lot of popular brands such as Pepsi, such as Gatorade, Mountain Dew, the Lipton iced tea, and other kind of Lipton products, the bubbly sparkling water, those ready to drink beverages of Starbucks. They own the right to those beverages that you see in a lot of the coolers. Those are owned partially by Pepsi. They also have a lot of snacks, which is where they're getting hit badly by GLP-1s. People are not consuming as much Lay's chips and Doritos and Cheetos, and maybe they're consuming a little bit more of the Sabra hummus, which is considered more of a healthy part of a diet, but they still have a lot of exposure in water and a lot of the drinks, and their drinking business has been doing very, very well in coffee and many other things. Now, Pepsi has been suffering from a structural decline in soda consumption in terms of volumes because people are consuming less and less soda. We're seeing many more soda-like products and juices and energy drinks and other drinks that people find much cooler than just drinking old school Pepsi or even Coca-Cola in general. So they've been switching away to different things and people are drinking less and less soda, which has led to a structural decline in volumes for Pepsi. And volumes have been declining 1 to 2% on a quarterly basis since the end of 2022. That has been waiting on Pepsi in general. Now, because Pepsi has massive pricing power, the company was able to raise prices much more than the volume decline to offset the prices. When we had a lot of inflation in 2022, 2023, Pepsi was raising prices 15 to 16%, and volumes didn't really get worse. They were still 2.5% decline in volumes. Then lately, they've been raising them 3 to 4%, while volumes have been declining between 1.5 to 2%. So they can still raise prices above the decline. Now, for the first time since 2022, this quarter, Pepsi has actually experienced a positive quarter in volume. They were able to grow volumes 1%, and they still raise prices about 2%. This is a massive, massive improvement as Pepsi has been shifting away more towards, you could say, more drinking products and healthier food in general, and they're seeing some benefits of it. For the first time ever, they posted a positive quarter in terms of organic growth, and they still raise prices. Now, if we look at the details for the quarter, their international business is growing like crazy. Europe, Middle East, and Africa, it grew about 4% in volume. Asia Pacific Foods has grown 10% in volumes. This is convenient food, guys. Beverages is still declining 4% in the United States, mainly the Coca-Cola products, or I should say the Pepsi products, but other products, especially internationally, have been growing like never before. And that's really, really good for Pepsi in general. Again, they've been diversifying. Now they have a stake in Celsius, and Celsius acquired Alani Nu. Alani Nu is growing 100% year over year, and they own a stake in some of those next generation brands that a lot of people like and a lot of people enjoy. They also have Poppy, which I've been seeing more and more of them, and many different things. So the company is diversifying away. They have the money, they have the logistics, they own the logistics, not like Coca-Cola. They actually own their logistics, they own the supply chain, they own everything. So that's very, very interesting to me. And they did grow in volume for the first time since late 2022. Now, in terms of the company's guidance, they're guiding between 4 to 6% in earnings per share growth. The company normally grows 6 to 8% annually. This year, they're guiding between 4 to 6%, which is really not bad at all. Now, most people buy Pepsi for the dividend. The dividend right now, it's one of its highest ever at a 4.1% starting yield. You wouldn't dream of getting a 4% starting yield on Pepsi for the last 5 or even 10 years. You normally get between 2 2.5%. Now you're getting almost double that at a starting yield of about 4%. And this dividend is well covered because the company's free cash flow yield is about 6%. So they pay about 4% and they still have about 2% left of a free cash flow yield for the company to do buybacks, to increase the dividend, or to potentially pay down the debt. And by the way, I'm using fiscal.ai for all the volume and all the data. If you want to try it out, they give you 15% off if you want to use my link in the description. But Pepsi's dividend is pretty amazing. They have grown the dividend at a 7% CAGR since 2010. They've been paying it for 54 years. I don't think the dividend will be cut anytime soon. I think there's a massive misunderstanding by a lot of people that analyze Pepsi on X. And they're saying that Pepsi is going to cut the dividend because the free cash flow is not enough to cover the dividend. And it looks at the 2025 figure where they had 7.6 billion of free cash flow and the dividend was 7.6 billion. That means Pepsi is going to cut the dividend. But they ignored what's called net working capital. Pepsi's net working capital in 2025, which are you could say, recurring expenses, they're more of timing related inventory expenses and other expenses, it weighted on revenues or on free cash flow by about $1.8 billion. So adjusting for the net working capital, Pepsi would have posted more than $9 billion in free cash flow against $7.6 billion in dividend. And this is why over 50 analysts are putting up free cash flow number of $10.8 billion for 2026 because we're adjusting for the net working capital, which becomes a benefit, and about $11.8 billion in 2027 against $7.8 billion in dividend. So the company can pay the dividend and they can have $3 billion left in free cash flow for the company to do dividends or to do buybacks or to potentially do acquisitions or to even pay down the debt. So I don't think the Pepsi dividend will be cut anytime soon. If we look at the company's debt obligations, they have $6.8 billion of short-term debt. Their cash position can take care of some of that. In terms of the long-term debt, excluding 2026, for 2027, they have about around $4 billion due at a 3.1% interest rate. Other years, about $4 billion a year, $3 billion, $4 billion. They have $3 billion left after paying the dividend from the free cash flow, and they can pay most of the debt every single year, refinance some of the things they couldn't pay. But most of it is low interest rate debt, 2%, 3%, 2.5%. So it's not really, and most of the debt, again, is $26 billion long term, and is between 3.2 to 3.4. So this is very cheap capital for a company like Pepsi. I think they should take their time to pay the debt, and the company can pay the debt. So I don't think the stock's going to zero, and I don't think the dividend yield is going to zero. I think the dividend will be sustainable. So here you're getting about 6% in earnings per share growth, about a 4% dividend. This is about a 10% shareholders yield, 10% annual return from Pepsi in terms of earnings per share and the dividend. And that's excluding a potential multiple expansion. The stock used to trade at an average of about, I think, 24 times. And the average was about 22 times earnings. Now it's trading at about 15 times earnings, guys. So it hasn't traded at 15 times since pretty much never. So 15 times earnings, you have the potential of a reversion back to 21, 22 times, and you're getting paid while you wait the 4% dividend, and the company through pricing power will most likely grow 6% in earnings per share every single year. This is the company's guidance about high single digits, which is normally up to 8% earnings per share growth. So to me, that's not bad at all. I see good risk reward setup on Pepsi. I think Pepsi is being hated on X because people say GLP-1 and all these things, but Pepsi is experiencing positive volumes for the first time ever. That's pretty amazing. And they've been shifting more into healthier drinks, healthier food in general, and not just focus too much on things that people don't want, and they're pretty much giving people what they want. They have the money, the logistics, they have everything they need. So this is not another Procter & Gamble where people can buy cheaper diapers somewhere else. This is more of a consumer brand where people love Celsius, they're going to pay up for Celsius. People love Pepsi, they're going to pay a little bit more for Pepsi. And Pepsi's pricing power has shown a lot of strength, and it hasn't eroded pretty much since 2022. So I think the stock's undervalued. I like the company for the long term. That's my opinion on Pepsi. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.